Tom Bowley, Chief Market Strategist here at Earnings Beats. Hey, good morning, everybody, and welcome to this Wednesday, May 1st, 2024 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes or so. Actually, probably a little bit less. I try to continue to nurse this voice back to health. But maybe for the next 20 minutes or so, we'll try to go through some things. There has been some deterioration in the market. Trying to remain objective about it. Really don't like what's going on with the transportation group. Another breakdown there. That's a strong signal, strong bearish signal about our economy. It's just one signal. It's not, everything, but the transportation group is a pretty important group. And so we'll want to continue to watch that. But been seeing a lot of deterioration in the truckers, the railroads, airlines, really across the board. And so that's probably one of the bigger concerns for me right now, short term in the market. Long term, I'm still very, very bullish. But the question is, is the most recent bottom the short term bottom or not? And I think we're going to find out on this leg down. We did see weakness yesterday, coming off some key tests of resistance and moving averages. So it's giving the look like it wants to go a little bit lower. I wrote a brief article over the weekend and talked a little bit about how, my sustainability ratios did bounce higher with this latest bounce in the market, but the overall downtrends in those ratios remain in play. So I think it's a case of not quite sure which way we go, and a lot of it may depend on the Fed. The Fed reports this afternoon. The policy statement will be out at 2 p.m. They began their meeting yesterday. They'll conclude it today. And then, of course, we'll be hearing Fed speak again as we look forward not only to this afternoon, but the next several days and maybe the next week or two. Which way is the Fed going to go? I mean, I feel like they've kind of, had surprises in both directions. I think there's a lot of uncertainty about that. Stock market does not like uncertainty. And I don't know about everyone else, but the Fed certainly doesn't give me a feel of confidence, like they quite know exactly what they want to do or what they're doing generally. And so I think all of that is weighing on the market here just a little bit. So anyway, we got a lot of that maybe to talk about and to go over, but especially the transports. That's going to be something that I think we need to really pay some attention to. All right, let's go ahead and jump in here. Take a look at yesterday's action first. So let me zero in so everybody can kind of get a better idea of my screen here. I know it's a little tougher to see when I zoom out. Dow Jones Industrial Average yesterday down 1.5%, 570 points. And you can see on the way down, the last lows were right around 38.5. Notice when we came back up right at the 20-day moving average and that 38.5 level, gap down, tried to rally back, failed again at the 20. And then look at that big red filled candle. These are the candles I don't like to see if, from a bullish perspective, especially when they occur beneath the moving averages, and especially when they occur after a recent test of our initial support levels. So there's a lot of charts looking like this or even worse in the short term, and that bothers me as far as whether or not the recent lows are going to hold. Many areas they already haven't held. We've already seen breakdowns. So it's going to be these next couple of days. And by the way, historically, we are in a very bullish period. Now, it's kind of been weird last couple of months when we look at how the market's performed versus how it's performed historically. Normally it's the second half of February and March that we see a lot of struggling in the market. And while we did see some relative rotation that, told us that maybe things weren't great, we didn't really see any major deterioration in the indices. But once we broke into April, that's when we saw the big selling, as you can see here on the Dow. We got the bounce. Now we've got another pullback here. Big question is going to be whether or not we can hold this low. Now, if we don't hold the low, not all is lost. We do have another low back here in January that if we went down and tested that, we would be hitting some support along with a lower low and possibly a higher PPO. So at that point, I'd be on alert for a reversing candle, because a reversing candle anywhere at this support level or at this one with a positive divergence could signal the end of the selling. So that's something I'll be watching technically. S&P 500 again, went back up to the 5,100 level, both moving averages barely above the 20, and then that big red filled candle. And the significance there, when I see a big red filled candle, that is selling throughout the day. That's not just a gap down. That's not just morning selling. We're closing on lows. And literally we closed right on the lows yesterday, which normally suggests we're going lower. Let me give you those futures here. So hang on one second while I pull that up. So let's start first with the diamonds that track the Dow Jones. Diamonds are down about 0.15%. So between 1 and 0.2%. The spider down a little bit more than 0.2%. The QQQ tracking the NASDAQ 100 down almost 0.4%. And the IWM also down about 0.15% like the Dow. But it is a gap down. It does continue the selling that we saw yesterday, putting in another lower low. So maybe we get a bounce back in the morning after gapping down. Maybe we pull back in the morning, have a little bit of a rebound later in the morning. But I'm going to be interested to see how we finish today. If we don't finish with a rally and finish at or near the highs, instead finishing at or near the lows, then I think this is a sell-off that could accelerate. And then, of course, if that happens, we want to watch the VIX. So there's a lot of different pieces to the puzzle in the near term. And again, I'm calling it a short-term pullback. I don't think it's over yet. We still got some, adjusting and some evaluating to do. All right, next up, NASDAQ 100. You can see right there getting a little bit above the 20, right up to that prior support area and failed. And right back down, and look at the huge decline, the big red filled candle. NASDAQ fell almost 2% yesterday, which was much more than we saw in the Dow, which was 1.49%, and the S&P, which was 1.57%. So we're seeing growth selling off a little bit more, which is another interesting fact, because today, May 1st, starts the best 4-month period of the year for growth versus value. That might come as a shock because the media likes to talk about go away in May. I think we're probably going to get a good opportunity in May to buy personally, but let's see how it all evolves and then we'll go from there. But go away in May, especially during this secular bull market that began back in 2013. I don't think that's been a very good strategy, and certainly not from a growth stock standpoint. Growth stocks have done extremely well from May through August. Mid caps also rolling over, down 1.76%. We've got the IWM, Russell 2000 rolling over, down a little bit more than 2% yesterday. So weakness here, failed to get back through 200. So I think we know in many instances where we need to go from here. We're going to need to get back through the most recent high and get through those moving averages. Transports, this might be the biggest issue right now in the market. Hold on one second. Try and get a little bit of voice back. And that's one of the reasons why I'm going to cut off the show a little short, because we have a live trading room. It starts at 10 a.m. I don't want to miss it. I think we have some really good information I want to talk about in the market and some trading opportunities with these earnings reports coming out. So, I am definitely going to try and save some voice. But look at transports right there. I talked about 15.4 and how 15.200 right in those two levels, how important that level was to hold. We went through it 2 weeks ago, came back up, failed to get through the 20-day moving average. And now here we are finding ourselves at a new low, closing on the low, and with the group down more than 2%, over 300 points. A pretty big drop on the transports. And I would say this is one of the weakest signals out there in the market right now, Because if you think about transports, at least when I think about transports, I think about our economy. If our economy is poised, or if it's in a position where it's either strengthening or the market expects it to strengthen, remember the stock market looks ahead. We should be seeing a very strong transportation group moving up to accompany what should be a strengthening economy down the road right now. So think about what the Fed's got on their plate. So the Fed's got inflation, which is showing some stubbornness. Wouldn't exactly say it's, taken off to the upside, but it's been on a pace where, 4.5% annual inflation on the core CPI. If we can't get it to go back down lower, I mean, that's what we'd be looking at, which is not horrible, but it's also not near that 2% level toward before cutting rates. And if they don't cut the rates and you start seeing weaknesses like this in the transport stocks, that's not a great combination. I'll be honest. In the stock market, you really don't want an economy that's slowing with stubbornly high inflation that creates an environment where rates stay higher for longer. All that's going to do is further deteriorate the economy. So the Fed's really got a big balancing act here. And again, I'm not bearish for the longer term. That's not what my signals are telling me. But in the short term, remember the correction last summer? I thought it'd be a short-term little 3% pullback, maybe turned into a 10% pullback. I see some similarities in what's going on right now. In the short term, it's not like money is pouring back into those high growth areas, at least not yet. That's something I think is going to be really, really important to watch over the next few weeks. And as the market goes down, do we see rotation back into those growth areas? That would be a really good signal that we're at or approaching a bottom. Not really seeing that just yet. So got a few things we need to pay attention to. All right, let's move on over to the sectors. So energy loves the month of April. Well, guess what? It's May 1st. And it looks like a lot of folks maybe were jumping out ahead of time thinking, be careful with energy going into May, because May has not been a great month for energy. And so maybe some selling ahead of time there. But I've said before, I'll keep saying it, I'm not a big fan of energy. I'm not a big fan of materials. I know gold and silver were taken off. I said I'm not a big fan of those. The things that normally drive those areas, which is normally a very weak dollar, is not in place. The long-term trend in the dollar is still higher. So I just don't see the environment for those groups to outperform long-term. Yeah, they had a nice pop the last couple of months. I'll give them that. And I thought it was okay to trade them on a short-term basis. Personally, I wasn't, because I don't trust them. But it was okay to trade them as long as you keep your stops in play. But if this is the start of something a little bit more significant, we'll want to keep an eye on that and make sure you keep your stops in play. Anyway, energy still above the 50-day, which is a lot better than we can say for a lot of other areas, but you can start to see some of the damage that's being inflicted technically. Discretionary got all the way back up to 180, had a really strong move up in Tesla shares, which helped the XLY. Well, Tesla was back down yesterday. Many of the other discretionary areas were down. And as a result, big red filled candle that not only failed to hold the 50-day, but then broke back down below the 20-day, again. So we know where our support is. That's down at 170, but that's still probably about 3% away. So discretionary stocks, in my opinion, we really need to watch that 170, maybe 169 area. Technology, look at this failure. I mean, this is classic technical stuff right here. Sideways consolidation, holding this support area. And then once we broke down below that 203, 204 area, all the way back down, lost this next support level. And then on the rally back up, where did we go to and where did we fail? 20-day EMA. Now, we haven't necessarily failed because we haven't broken down below the prior low, but this is the kind of look where it seems like the higher odds at this point are to at least test this prior low, if not break back down beneath it. So things aren't looking so great right now. Historically, like I said, the beginning of May tends to be very, very strong. And the end of May tends to be very, very strong. Middle of May, not so much. From about the 6th through about the 25th. That period historically has not been a great period in May for stocks. But to start the month, end of the month, tends to be much, much stronger. Not really seeing that as we go into May. I mean, again, this was in April, so it doesn't count toward May, but just technically, rather than breaking down, I'd like to see that break back out above the 20-day. I'd like to see transports reverse. I'd like to see my sustainability ratios really start to move higher. None of that's happening just yet. So we have to at least be on guard here in the near term. Autos down 5% yesterday. Again, a lot of that had to do with Tesla. Tesla was down yesterday, and so too was the group. Can we hold on to these moving averages as we pull back? Gap support, I'm going to say right around 640 is a big level on the autos. Excuse me. All right, commercial vehicles, trucks breaking down. This is in the industrial group. This has been one of the strongest groups in the first 4 months of the year. But since early April, you can see the deterioration here on the chart. And then finally, we broke down below the 50, went back up, failed at the 20, and we broke down again. So this is a group that's taking out the prior lows in April. Definitely not a good look here until we get tactical reversal. You've got to be careful with this group and with the stocks in it. And then finally, look at software. Again, what did we do? We broke down below this support level, this support level, this support level, 3 breakdowns, back up, failure at the 20-day, and a new low. Again, not a good look. Software down 2.92%. There were some other sector or industry groups, by the way, that were down a lot more. I think the brewers were down about 8%. Aluminum, I believe, was down 5 or 6%. But these are influential groups: autos, commercial vehicles and trucks, software. These are all areas that we want to really pay attention to. And none of them really, well, autos maybe look okay right now. But they are the ones that have been beaten down the most in 2024. These last two, though, not so much. Anyway, I spent a lot of time on that, but it's really important, I think, to see what's going on. Let's get a quick update. 10-year Treasury yield. We had the ADP employment report out this morning, and it came in slightly above expectations. So for the month of March, the ADP jobs actually was revised higher from 184 to 208. And then for April, the consensus number was 175, and we came in at 192. So that's not bad. The only problem is if the Fed's really aiming to try to squash inflation, we don't really want to see stronger than expected jobs numbers. We want a perfect balancing act is what we want. We want jobs growth to remain positive, but we don't want it to accelerate. And I guess the fact that we were at 192 in April and we were revised up to 208 in March, maybe, we're coming down slowly, which could be a nirvana type of situation. But what we don't want is for the economy to appear to be getting overheated. I don't think that's where we are. But anyway, that's what I'm sure the Fed is watching. So the 10-year Treasury yield right now, 4.65%. You can see where we are and why it's such a big announcement today and what the Fed has to say. Because right here, that's where we gapped down and had the big move down to about 380, just below 380. We've worked our way all the way back up, tested that, also have met that cup and handle breakout measurement, which was up at a 465, 466 area. So this next move, I think, is going to be pretty important. If we go through 470 with any kind of force, I believe we're going to go up and test that 5% level. And that would probably be enough to send the market back down, possibly to new lows, at least recent new lows. So something to keep an eye on for sure. All right, S&P, I've gone through this, so I'm not really, let's just skip these. I do want to just show you on a bigger chart that breakdown again on the transports. Moving on to the chart of the day. I have not gotten the chart of the day out because of my vacation last week and not really feeling great, trying to play catch up on everything, and I haven't gotten to the EBD. We will get one out today. It'll just be later this morning, probably. And it might be the chart I'm about to show you, may not. I'm not sure. Anyway, if you're new to Earnings Beats, welcome. Be sure to like the video and subscribe to the channel. It really will help us here at Earnings Beats. But you can click start your 30-day no-cost trial. It's always a great day to start on a Wednesday because we got our live trading room. And if you start on a Wednesday, you get 5 live trading rooms for free during your no-cost trial. So make sure you give us a shot there. If you're totally new to Earnings Beats and you just want to learn more about us, scroll down at earningsbeats.com. Make sure you sign up for our free newsletter, name and email address. Hit that subscribe button. That's all it takes. No credit card required. You can unsubscribe at any time. You're not going to hurt my feelings. Honestly, we just do this for our masses, for the masses that follow us, whether you're a paid member or whether you're simply a free community member. That's why we do this, just for further education, try and stress some of the things that are important to us. One thing I do want to mention, and I mentioned this yesterday, I believe, in XPI, it was gapping up after earnings. And one of the things I said, based on these candle bodies, was to watch to see what NXPI, what price NXPI opened. High candle body prior to yesterday's open was 257.76. You know where we opened yesterday? 257.72, 4 pennies below that key price resistance level. Now we opened below it, we traded above it. And what did I say yesterday? If we opened below it and then moved through it, it would probably be an opportunity to short for those who were interested. Well, we came back down, and I am going to admit something I haven't done in a while. I actually shorted NXPI. I had a tight stop, and I did it briefly. I waited after we went up over 216. We came back down, back below 258. That's where I actually shorted it. I was only in for, I don't know, maybe an hour or two. I don't remember exactly how long it was, but I was back out probably around 253 and change. And I know it went lower than that, got down to 250. I don't think it's out of the woods. I think it's still going to go back down and test that gap support to the downside before it breaks out. We'll see. But we did have some poor reports out of the semiconductors yesterday, especially AMD. So advanced micro devices. And I want you to look at something. AMD, look at the relative strength. It went from a very strong relative strength level, 52-week high, down to a 52-week low in 3 months. I don't know if it's the economy. I don't know if it's just AMD, but the market didn't like something about AMD over the last 90 days. And I want to tell you what AMD is doing this morning in pre-market. It is down $8.47, 5.35%, trading right now at 149.91. So that means if it opens somewhere around there, it's opening above price support. What's that price support number? That low right there of 146.64. So for me, if it opens above 146.64, sells off beneath this level, and then comes back up above it, it's a stock I might trade short term. But there's a lot of these types of stocks that I want to talk about during the live trading room today. Usually, and this week is no exception, because I've been so busy trying to catch up, and again, not feeling great. But if you plan, if you look ahead, if you check out earnings, you look at these support levels, you can put together a plan of stocks that you want to trade intraday and just try to make some money intraday, no matter which way the stock market goes. So I would, again, take advantage of that 30-day free trial. I think you'll learn some things, especially about earnings. My favorite time to trade stocks is throughout earnings season. And we're going to talk quite a bit about that in about 35 minutes when the live trading room starts. So anyway, I wanted to mention AMD. Also, Starbucks, almost getting to 9:30, so maybe I'll wrap up with this one. or maybe I'll take a look at one more. Starbucks, look at the AD line, which has been coming down for months on months. That's telling us institutions trying to get out of Starbucks. Stock's been going down. Haven't we been in a bull market? I mean, Starbucks got off to a great start in early November, but from mid-November on, look at this. It's been going down, down, down. Look at the relative strength in the restaurant and bars group. Have you been watching many of the restaurant and bars group? I mean, that many stocks in that area. Have you seen Chipotle? I mean, Chipotle has been on fire. We've had other Shake Shack. I was looking at Starbucks foot traffic, which, I mean, you can talk about maybe the economy or the customers not wanting to spend and so forth. But when you've got competition like Dunkin', which has seen more foot traffic than Starbucks, you got to start wondering about the management team itself and what they're doing. My point here is when I see a stock on a relative basis that's doing this, I'm not going to try to be a hero heading into earnings. I'm expecting to hear why it's been, completely just thrown out the window relative to its peers. Why doesn't Wall Street like the stock? Well, if you took a look, they missed their revenues. They missed their earnings per share by a pretty wide margin on both. And they lowered their guidance. And quite honestly, it looks like management team failures. So Starbucks, by the way, pre-market today, down $11.60 to $76.90. That's $8, seven and change below the recent low. Another major breakdown on Starbucks. I'm not interested in a stock like Starbucks until it can show relative strength. I mean, there's another stock out there. I remember it's just, it seems like just month after month after month after month and year after year. PayPal. I mean, PayPal is finally starting to show a little bit of relative strength. But if we go back a ways, let's go back 5 years, and we look at that relative strength line, it started in 2021. Do you see anything on this relative chart to get you excited about PayPal? Which is why when they start breaking down in relative strength, look at this, they had a double top in 2021, but look what was happening with their relative strength. And so once this trend line broke and relative strength support broke, you don't want to be as part of a stock like that. Anyhow, almost made it to 9:30, but I'm going to go ahead and wrap up right now. One thing I'm going to get into as soon as we get to the trading room is I want to go over the upcoming earnings chart list for today. So all the companies that reported last night and all the companies that reported this morning, we're going to talk about that. We're going to look to see which stocks open the best, which ones open the worst, and see if there's some trading opportunities off of that early this morning. Remember, I call the first hour of trading amateur hour. So if a stock's getting hit really hard, but maybe doesn't deserve it, I'll be looking for some triggers to potentially get in and try to catch a quick bounce back to the upside. Same goes for a move to the upside. Just like yesterday with NXPI. Big gap up, did not make the breakout on the open, traded up a little bit in the morning, and then back down it came. Some of these present some really, really nice trading opportunities where maybe you can make 1, 2, 3, 4% quickly. Again, that's what we'll be talking about in about a half hour. So have a great day, everybody. Getting close to the end of these webinars for the week. So hopefully I can get my voice ready to go for next week. But thanks for being patient. And as always, happy trading.